Bitcoin has been crashing hard over the past year, from its high of 64,400 in November to today standing at 19,520, a near 70% drop. Bitcoin is like Marmite, you'll either love it or hate it, but even if you hate it, you might be thinking, damn, can I make some money? China has warned Bitcoin is heading to zero, rising energy costs are hammering Bitcoin miners, and on the flip side, Biden is discussing crypto legislation, and the giant Deutsche Bank is predicting that Bitcoin will be back at 28,000 by the end of the year. It's fair to say there's lots of mixed signals, so let's unravel what's gone on, where it's headed, and I'll tell you what I'm personally doing among this madness. So smash that like button, and here's a cute picture of my brother's puppy to say thank you. First up, let's dissect what happened. Why Bitcoin has crashed so hard, because that's pretty crucial in understanding where it's headed. In November, people were celebrating their all-time highs off the back of an amazing bull run, a 700% gain in 12 months. Their portfolios were full of green positive returns. And just in case you have been living under a rock, then came inflation, the Ukraine war, and fears of rising interest rates. Wait, aren't you talking about the stock market? Nope, this spills on over into cryptocurrency too. Why? Because Bitcoin is linked highly to the dollar. But isn't Bitcoin its own currency? Not yet. While it wants to be, it's a long way away from that level of adoption. If markets fall, then so does cryptocurrency. But isn't it supposed to be a hedge on inflation? While it's intended to be, it hasn't acted like a hedge at all. And if we look at the correlation between the stock market and Bitcoin, we can see it's reacted pretty much identically to the stock market. It's often compared to gold as a safe haven against the stock market, but it can't act in this way until it has its own standalone value. So it started to fall. Then in May this year, many investors who considered cryptocurrency to be a roller coaster invested their money in the Anchor Lunar USDT protocol, meant to be a stable cryptocurrency which the price remained the same, but generated almost a 20% fixed return. This became unpegged, meaning it lost its value of being worth equal to $1, due to an exploit which people were able to manipulate, which wiped out 45 billion in cash. Yep, 45 billion. When most people think of cryptocurrency, they think it's some small tiny thing that not many people invest in, so that number will likely shock a lot of people watching this. The value of the entire crypto market fell from 1.7 trillion to 872 billion as of last week. And recently, one of the biggest cryptocurrencies, Celsius, were forced to pause their withdrawals due to too many people trying to withdraw and their loans collapsing, which has sent shockwaves through the cryptocurrency market, leaving a lot of people in limbo. And today, the Chinese news outlets are publishing negative news about cryptocurrency, trying to encourage people to stop investing in it, which is no surprise since they've been banning banks from dealing with it, and they've tried to ban people in China from mining cryptocurrency, which only seems to have lasted a couple of months, with China once again being the second biggest miner of cryptocurrency in the world. And China are planning to launch their own digital currency soon. But this is worrying because if they did manage to stop them, it would have consequences. So that's how Bitcoin's crashed and where we've gotten to. I actually think there's a cost that a lot of people aren't mentioning, and that is to do with mining, which I actually see as being one of the biggest issues right now. If you don't know, Bitcoin is mined on a computer, or a form of computer. The computer's processor runs at fast speeds in order to solve complex equations, which in return for solving an algorithm rewards a person with Bitcoin. Well, that mining process comes with a lot of energy usage. People mining Bitcoin could easily have the energy costs as high as £10 or £100 per day, depending on how much they're mining. Now, there's a margin between the electricity costs and the price of a coin, which in turn determines which are the most profitable coins to mine and how much you will make. Now, there's two sides to this debate, because at the moment energy costs are rising, which means it's more expensive to mine and less profitable. I know that a lot of my friends who mine are making pennies right now compared to what they did in November. Of course, that's also if you're looking at selling in the short term. I know someone with a large mining setup who's never sold and plans to keep it as long as possible. He's lucky enough to be able to cover the electricity bills from other funds. But this will stop a lot of people mining if they're not making as much money. This is a problem for Bitcoin because in order for the price to rise, one of the factors is all available Bitcoin being mined. So if less people are mining Bitcoin because it's less profitable, the slower it's going to reach that fully mined state. This is a point where people are predicting that Bitcoin could rise as high as $500,000, which is what everyone's hoping for. Now, on the other hand, hopefully once the situation in Ukraine is resolved and the world returns to normality, energy prices may decline, which means mining may become more affordable. There's also been a massive shortage of graphics cards. They've been super overpriced and hard to get your hands on. Now, that has started to die off and may return to a more normal level in the next few years, which would make mining more accessible and people would start again. So it could mean good news for Bitcoin. If the price hikes eventually die off, and investing when the prices of energy have helped drive Bitcoin down could be a good thing. Nathan Rothschild, a 19th century British financier and a member of the Rothschild banking family, is credited with the saying, "The time to buy is when there's blood in the streets." Now, I'm definitely not the type to try and blag you with a load of financial charts and data and show you patterns as to why Bitcoin is definitely going to go up or down, because putting it blunt, anyone who says that is just lying to you. If they could, they'd sell a house, leverage it on crypto and be a multi-billionaire. They wouldn't even waste the time telling you. But what surprises me most is that when things go bad, nobody wants to know. When crypto is soaring and at its peak, people are super hyped up about it, ready to buy, and when it falls... Now, I'm not saying you should rush out to buy Bitcoin, but if you believe in it, surely now is a better time than when it was high. But what I would say is you have to think of the risk to reward ratio. When you see a lot of people have made crazy money with cryptocurrency, it's because they bought it when it was super low and it's gone super high. Now, of course, that looks great when you see the chart has shot up, but let's say Bitcoin's at 20k now. If it goes back up to 60k, you'll 3 times your money. Of course, it could just as equally go down. Now, 3 times your money, 20 to 60k is amazing, but it's not like you bought it at $1 and it's gone up to 1,000, which would turn your 20k into 20 million, which I think is a return most people are expecting. So you do really need to do the maths on that front and understand the return. Not to say tripling your money isn't great, but it's not going to make you a millionaire unless you're holding out for that 500k price point. Aside from the current price of energy and the price being down so much, there's one more huge consideration, and that is future adoption. When it comes to the future adoption of Bitcoin, there's 3 main things that come into play. The first is consumer confidence. I would say that consumer confidence is most likely at an all-time low in cryptocurrency. Some people will hate me for saying this, but it's true. After one of the biggest stablecoins or considered safe coins has fallen, one of the biggest networks pausing people's money, a lot of everyday investors will correctly be scared to invest. Heck, I'm sure that a lot of you watching this are saying,
"I hate cryptocurrency."
I actually think that a lot of the culture that's grown around crypto is quite a shame, because in some ways it has brought some of the most intelligent people together, working to create some cool, interesting projects, and it could achieve some very interesting things in the future. The whole get-rich-quick mentality, in my opinion, has put a dampener on it. Perhaps those people may now fall out of it a little bit more, and everyday investors can edge back in when more confidence grows. But to build that confidence, this is going to be needed: governance. The government getting involved pretty much goes against everything that cryptocurrency stands for. It's not meant to have governments getting involved and regulating it. It's supposed to be this anti-establishment movement which stands on its own 2 feet. I think this has perhaps stemmed from people not thinking that cryptocurrency would grow as large as it is today. Realistically, as much as I love the idea of a one world community, everyone works together, wealth is shared equally, money isn't spent on wars, instead we focus on bettering the human race and the planet, I don't think it's very realistic. Let's say that tomorrow everyone switches to Bitcoin and the price never fluctuates. Even then, who's going to pay taxes and pay for key workers, pensioners, and all the other facilities we need to run a society? In theory, not paying tax sounds great, but the reality is we wouldn't survive. And when 45 billion is getting wiped off the face of the earth in a couple of weeks, what choice do they have? More and more governments are leaning to create their own digital currencies, which personally I don't think will work. Realistically, it's not an awful lot different to the country's fiat currency. I certainly wouldn't be swapping my money for £E unless there was some amazing benefit, which I think likely there won't be. So I don't see that as a real threat to Bitcoin. But one threat I do see to Bitcoin is adoption. Yes, we need adoption from consumers, but we also need it from companies. Now, some huge companies have adopted cryptocurrency. PayPal, for example, has added Bitcoin and a few others. But the problem is here. Remember when crypto's biggest cheerleader, Elon Musk, said he would accept cryptocurrency for Teslas? He soon decided against it because of one thing: energy consumption. Remember I told you earlier about how it's so expensive and how much energy it takes to create Bitcoin? Well, that's called proof of work. Instead, other cryptocurrencies are moving to something called proof of stake. What this means essentially is that holders of a coin will stake it for a reward, basically earn an interest on the crypto, while generating more of the coin. It's a much more energy efficient way of doing it, taking 99.5% less energy. Ethereum too is moving to this model, whereas Bitcoin isn't. Companies now more than ever are extremely focused on reducing their energy costs, mostly to save them money, but also there's an increased pressure to reduce carbon emissions. A lot of companies are moving towards net zero emissions, which may make Bitcoin harder to adopt, or they may choose to ignore it and just deem it as a third party out of their control. We'll see. But if eco is your concern, then Ethereum 2.0 would certainly look like a better option. Of course, there's plenty of others using proof of stake, but Ethereum and Bitcoin are the best known and most likely to be widely adopted. But there's no denying that right now the whole market is being driven by the price of Bitcoin. It is the original and the most widely known household name. A lot of people wouldn't even know there was another type of cryptocurrency. Some people don't even know what crypto is and just think it's all Bitcoin. So let's talk about what's my plan. Well, currently I'm in a bit of a tricky situation because I've been pooling together my money with the aim of buying a house. Over the past 12 months, it's fair to say I've lost out quite a lot on some of the projects I've been invested in. Luna was the latest to sting me. Don't get me wrong, I've won on some and lost on others, but overall, like most, I'm down. At the moment, I'm super focused on growing this channel and reinvesting, as well as building up my new 100k portfolio. I'm adding more to it and will continue to do so. I also have a 16k ISA and a 4k lifetime ISA on my hit list before the end of the year, which I likely may not hit this year due to buying a house. But as long as I contribute to the pension, I think that's okay. That's not to say I'm completely out of cryptocurrency, and I do think now is a good time to start averaging in. But I wouldn't bet my house on it, and here is exactly what I would do, and what I think I'm going to do soon. I'd average into Ethereum and Bitcoin equally, a small amount each month. If there was a sudden spike in price, plus 5% over 24 hours for example, I'd take half out as profit and keep it in there, just because the price fluctuates so much. I'd then reinvest that profit when the price fluctuated and it was down maybe 5% again over 24 hours. I get alerts consistently about this from my crypto apps, which makes it very handy. A lot of sites will do this for you, or you can just check the charts. I would treat it as a bit of fun and just see what happened. There's definitely potential to make some great returns, which we likely won't see from the stock market for the next few years. I do think the stock market is heavily tied to it, but I do think Bitcoin and the whole crypto market is a long way from dead. After all, there's still nearly 900 billion in it. Like I say, with a bit of hope, the hype and the toxic side of smaller projects will fade away, leaving room for more stable, safe cryptocurrencies to do well. If Ethereum 2.0 could perhaps work in partnership with the government, not to let them have control, but just in some ways to make sure people are safe, then with more adoption, lower transaction fees, making it a more viable option, that could be a great investment. But I can see for the next 5 years at least, Bitcoin will continue to dominate the crypto market. And I don't think it'll ever be forgotten about. After all, it is the OG. Let me know what you guys think down below about Bitcoin. How do you feel? Do you feel confident enough to buy crypto now? And are you taking the opportunity to buy it while it's down? If you are, I would recommend checking out CoinJar. They've got a free crypto card and you earn points, which literally makes your transactions free. And they're safe and compliant, which is always a good thing. It's the only provider I'm using right now to buy crypto. Do check out some of these videos. Thanks for watching, and I will see you in the next video.